Hi everyone, my name is Alun Evans. I'm the CEO of Freeverse. It's a real pleasure to be here today. And someone told me somewhere once, I can't remember where, that a good way to start a talk is to start it with a question. And so we're going to start today's talk with this question. So I want you to think about it. Which one person, in your opinion, has had the most influence on the games industry? Yeah, a single person who, in your opinion, has influenced our industry the most. Think about it. Still thinking? Maybe you're a fan of world-building games and you think it's Will Wright. Maybe you're a tech nerd like me and you think it's John Carmack. Maybe you look more towards the east and you think it's Hideo Kojima. All good options. It's a kind of an impossible question, but still, it's a nice thing to think about. So hands up then in the audience, how many of you thought of this guy, Chris Anderson? Not a single hand for the benefit of the people watching this on the Vault another time. Not a single hand. How many of you heard of Chris Anderson? Yeah, a few hands. A few hands. That's good. So some of you might be reading this now and thinking, hang on a minute. Chris Anderson is not REM's bassist. Mike Mills is REM's bassist. So what are you talking about, Alun? And the story goes that 30 or so years ago, coming out of Georgia, there were in fact two bands called REM. One was a punk REM band in which Mr. Chris Anderson was the bass player, and the other was the REM that we know and love and has gone on to become a global juggernaut. But in true Highlander fashion, there could be only one REM, and so the two REMs had a battle of the band in Georgia to decide who got the rights to take the REM name going forward. And unfortunately for our hero Chris here, his band lost the battle of the bands. They dissolved their punk band shortly after that, and the other REM went on to become who they are, and the rest is history. But the punk industry's loss has been the games industry's gain. Because Chris Anderson, when he gave up on his punk bassist dreams, decided to dedicate himself to the other interest in his life, things like economics, things like journalism, and he went on eventually to become a successful author and also editor of Wired magazine. And in the context of our industry, Chris was very interested in this problem when seen through the lens of the games industry, right? And the problem was, back in the day, making games is an expensive thing to do. We all know that. So, of course, that when you're making a game, especially if you receive investment to make a game, there is obviously a pressure to return that investment with multiples. And so there's an impact of that, which is like when you are about to launch the game, there is a stress to make your money back. Right? You need to make the money back, right? It's natural, it's normal. And the root cause of that, according to Chris Anderson back in the day, was that the time that you're most likely to recoup your investment and get a multiple on an investment is the time immediately post-launch of the game. So you launch a game, and that's the time when you get most of the marketing, most of the press, most of the reviews, the newness, right? And that's when people are going to buy your game and give you your money. And Chris was interested in something a bit more long-term. He was interested in products in general, and he was interested, how can you actually monetize a product, not just in that initial window post-launch, but over a longer period of time? How can you make the long tail longer and fatter in terms of monetization? And he wrote a couple of books about it that were actually very influential on the gaming industry. One was called, indeed, The Long Tail, and the other was called Free, right? Talking about how can you monetize products that are given away for free. And of course, that's had an enormous influence in our industry, in the games industry, because it's led to the rise of free-to-play. And of course, now we're very familiar with free-to-play and microtransactions, and we're very familiar with how that has revolutionized our industry over the last couple of decades. And of course, we're all familiar with the standard monetization strategies that you can see in free-to-play, right? So you have advertising, subscriptions, and of course you have in-app purchasing. And trading of items generally, or in-app purchasing, is tens of billions, I think that's $40 billion or more that people spend on in-app purchases. And this idea of buying and selling items with microtransactions is something I want to focus on in this next 20 or so minutes that we're together. Because you're probably aware, I'm certain that you're aware, in fact, that gamers do, of course, buy things in microtransactions in games, but they also like to trade amongst themselves. Maybe you've been to websites like GameFlip or Player Auctions or whichever your favorite CSGO weapons or Fortnite skins trading site is, and you'll see there's a whole bunch of people that are buying and selling these items. And these third-party websites are making quite a lot of money, right? In fact, it's been estimated that the trading market for in-game items is worth around about $10 billion a year, right? These are stats from a Newzoo report that came out recently. Around about $10 billion a year is being moved on these trading markets. And within those markets, more than 4/5 of gamers who are aware of the ability to trade in-game items would like to trade those items not just for soft currency, but they actively like the idea of trading them for hard currency, for dollars, for euros, for pounds, for yen. And of those, 3/4 of them are interested in item trading, and they would trade more if they knew they could extract that value from the game, right? So these are stats done from fairly well-respected market survey. There's a lot of money going on here, and there's a lot of interest of people who are trading. They're actively trading. And so the problem that we have is if you're a game developer and you have these items in your game, in a multiplayer game, for example, the next question is, how much money do you as a games company make from this $10 billion asset trading market? Does anyone know the answer? Can you guess? It's not a big surprise. I'm leading you into this, right? It's a big fat zero. No money at all. $10 billion, more or less, is moving in this market, and game developers are making no money out of it, right? They are not controlling it. It's out of their control. It's out of their ecosystem. And it leads to all sorts of problems, right? If you've ever gone and bought a Fortnite skin, you pay dollars for it with your credit cards, and then you have to go into the game, kind of, sotto voce with a hood over your head, meet some bot, at least you hope it's a bot, and they sort of drop a bit of loot in front of you and you collect it. And usually it works, in fairness, right? But it's still, it's kind of like you're doing something wrong because you know it's against the terms and service of the game. And in fact, it's usually explicitly against the terms and service of the game. Here is a screenshot from Epic's website, taken last week, yeah? Can I trade items in Fortnite? And the answer is, trading with other players is not a supported feature in Fortnite, yeah? And then a warning about doing so, why doing so might scam you, and so on and so forth. So the question that I have is, why, if there is a $10 billion market here and an opportunity for games to essentially make more money, right? Why are they not doing it? Why isn't Fortnite doing this? Why does Fortnite, in fact, almost every single game, explicitly prohibit this type of trading? And the answer is quite straightforward. The answer is quite straightforward. If you, as a games company, are storing on your server an item that has monetary value in hard currency, in dollars, for example, and you are the custodian of that asset on your server, then legally, you are required to be a bank. You are required to comply with banking legislation because you are storing something which has monetary value on behalf of somebody else. And if your server got hacked or got taken down, you forgot to do your backups or whatever, and you lose that item that has a monetary value, then you could get sued, right? And so that's why the whole banking legislation is there to protect the consumer, yeah? So if the game studio owns or provides a way of storing ownership of real monetary value, they have to become a bank, which is essentially the reason why they don't do it. So what's the approach to solving this problem, right? How can you solve this problem? Approach number one, you just ban it. which is what the current situation is, which is fine. You know, it skirts the problem, but it also avoids the opportunity. Option number 2 is that you become a bank. It is possible to become a bank. I'm sure Epic, if they really wanted to, probably could become a bank. Might take them some time. Or you could partner with some service that offers that, the possibility to abstract the responsibility of being a bank to somebody else, but it's still kind of restrictive. You're not controlling it completely. Or you could use this third approach, which is the blockchain, right? And one of the benefits of blockchain is that you can abstract the responsibility of ownership away from your private servers and onto a wide decentralized network where nobody trusts each other. That's kind of the purpose of the blockchain, is to deal with these problems. Fine, so there's a potential solution here. There's a problem here, isn't there, right? Blockchain's kind of a dirty word. And it's a dirty word because of an associated dirty word, which is speculation, right? This graph is from Axie Infinity. It's a little bit out of date. I read that Axie Infinity has like 9,000 active users at the moment, down from a peak of something X many million. Blockchain games so far, NFT games so far, have used speculation as a core mechanic. Come into this game with the explicit goal of making money. In fact, some other sort of gamified applications like NBA Top Shot, their marketing was all about making money, right? I don't play games to make money. I spend money on games. I play games to have fun, not to make money. And yes, it's been a wonderful success, Axie Infinity, and there have been other sort of play-to-earn games that have done quite well. But they have led to this feeling in the wider industry, yeah? NFTs suck. Crypto sucks. Web3 sucks. Possibly. I think a more accurate description is that the play-to-earn model, which is a valid model, and people have made money out of it, it appeals to people who like to invest and not necessarily to gamers. And it kind of scares away, inverted commas, I hate to use the phrase, real gamers. Yeah? And I kind of agree with that sentiment. I don't want to hate on play-to-earn in the model, but it doesn't appeal to me particularly. And I don't think it appeals to the wider games industry. And as a result, we have this problem. And it bothers me because I believe very strongly that Web3 and blockchain technology can solve problems that benefit not only game developers and game publishers, but also appeal to regular gamers as well. I believe very strongly in this. And one of these problems is precisely this idea of these second-hand marketplaces and how to solve it. Gamers want to trade their items in markets. Yeah, that's clear. Gamers want to create their own content and share it. Gamers like the idea of player-driven economies in their games. So let's give gamers what they want. So what I believe very strongly is that blockchain technology and Web3, the whole Web3 movement in general, can and will succeed when it insists on maintaining fun at the heart of a game design and using Web3 as an extra pillar to benefit that game design and not hanging the whole weight of the house on it. And I think you can do that if you create user-generated value, if you allow the value of the items to depend on what the user does with them, as opposed to being speculation as to how artificially rare they are. So how can we create user-generated value? How can the value of an asset in the game be dependent on what the user does with it, what the gamer does with it, right? There are kind of 3 high-level things that I want to talk about. You can enable that asset to evolve and change based on what the gamer does with it. And we're kind of familiar with this idea as gamers, right? Those of us who've played role-playing games are very used to the idea of upgrading your items and your characters and your gear, yeah? Those of us who play simulation games are very used to the idea of, essentially hoarding commodities and spending commodities and upgrading whatever you're building. And I think that concept of evolution, right, of adding a dynamic element is what's required to make sure that the tokens that are being sold and traded amongst their users are being valued by how useful they are to other gamers. Yeah? Let's see some examples. Evolving by playing. Let's imagine you have a football player, a soccer player. I do apologize for the local audience. I'm British, but I live in Barcelona in Spain, so obviously I had to use Barcelona's favorite son as an example here. Let's imagine you have a soccer player in your team. He's a 3-star soccer player, and you buy him for $10, right, or whatever it is. If you don't do anything with that player, then no one's going to buy that player from you. It might even go down in value, right? But if you train that player, and you turn that player, and you play with it a lot, and you spend hours and hours and hours and hours in the game, then the value of that player, according to somebody else, another user of the game, is going to be higher. Of course it is, because it's going to be a 6-star player rather than a 3-star player. So you're evolving the properties of the asset based on what the gamer has done. You can actually add what I like to call the Tamagotchi mechanic into here as well, right? You can say that the player will get better if you train him or her, but the player also might get worse and get fatter if you don't train them, right? And those of us who are familiar with Tamagotchi knew that it was one of the most amazing retention mechanics, right? Your little pet will die if you don't come back and play with it, right? I'm not saying you should kill your soccer players, but I think you can use that mechanic to drive retention, and I've got some stats about a couple of games that do exactly that coming up. One of our clients here, Uplay Online, they're launching the 3rd iteration of their soccer manager game. And they're not even mentioning the word NFTs anywhere, right? But in the background, they're using Web3 technology to permit the trading of players and areas of land and other items in the game. The gamer doesn't know, and nor does he or she care, that these are actually items on the blockchain. They just want to buy and sell in a player-driven economy. The idea of the Tamagotchi mechanic, another game, another sports simulation game, funnily enough, called Goal Revolution, which was launched on our platform, with almost 0 user acquisition. Yeah? This game obviously went up, started having users, naturally started falling down as user action went down. There was very little marketing spend. But look at this MAU curve. It flattens off. And it even starts to grow with 0 UA spend, right? And that's because the gamers were worried about losing their assets. There was a retention value there, mechanic in there as well, because these assets were dynamic, and they encouraged gamers to come back to play with them. User-generated content is huge. Yeah, user-generated content is huge. I was just chatting to a gentleman earlier on today who was making a D&D map builder creator, those who like Dungeons and Dragons, right? And wanted to have the idea of tradable user-generated content in the game that he was building, right? Not because it's like he wanted people to like make money out of the game, because he wanted the community to be interested. He wanted to incentivize the community to create. And one way of incentivizing community to create is to say, well, okay, well, you can sell it, and you can sell it for whatever price you want. So if a map creator creates some Dungeons & Dragons maps and puts 5 of them in a packet and sells them for $5, great, that's wonderful, right? And that's exactly the problem that Web3 and blockchain can solve, you know, by engaging with the idea of user-generated content, whether it's creating original content or modifying content you've already bought. You're just creating community and you're engaging your user. The other fun thing that some of our clients do is they actually branch away from the regular gaming world and the regular Web3 world into the Web2 world, into the social media world. So you can have your token that evolves and changes based on what you've done in social media, whether you've retweeted something or you've shared something on Instagram or you've liked something on Facebook or whatever. Your interactions in your social media accounts modify the properties of your in-game assets, right? Another way of building community. And obviously, it has to be done with the permission of the user, right? They have to link their social media accounts, but that can be done if they choose to do so, and it gives them benefits. So it's another example of how adding a dynamic element to this ownership right, is engaging users in a different way and bridging that Web 2, Web 3 divide. You can even bring into loyalty programs, right? And sort of away from the gaming world, you can link loyalty programs and for brands to the idea of how much a user engages with that brand. Well, I'm going to reward them by leveling up their NFT, right? The more they engage with my brand in the Web 2 world. It's something that happens away from the gaming spectrum, but I think it's interesting to see that crossover between Web 2 and Web 3. And so, as a summary, if you have dynamic NFTs that can evolve and change based on what the user does, then you solve several challenges in terms of retention and monetization, right? You're rewarding players for the time that they've played. In Web 3, you can allow the NFTs to level up, right? And that increases the retention for your game, right? If you want to encourage UGC, right, you can tokenize it, enable it to be traded in a player-driven economy, yeah? And you can monetize that market. You can control that market. That $10 billion asset trading market suddenly becomes under your control, and it's a way you can monetize. And so if we go back to the idea of Chris Anderson's original ideas 20 years ago, I think that if we add a Web3 component to this long tail, we should be able to convert it into something looking a bit more like this. Yeah? Web3 may not necessarily impact the game's initial sales, but it certainly can, and I would argue should, have an impact on that long tail and maybe even help it increase over time as the game's community increases. So, I'm hoping I've managed to provide you with a fairly convincing argument of the why, and I'm going to finish off today talking about the how. There's kind of a problem with NFTs, right? The first is that NFTs are tricky at scale. There are loads of really great companies here at GDC who are attacking that problem, right? But even so, I think if you're going to create a AAA game at scale, you're kind of going to struggle with even some of the scaling solutions out there. And the big elephant in the room is this one here, right? NFTs, as most people understand of them, are these static collectibles. Let's talk about both these problems in turn. The first is scaling. Now, those of you who are familiar with Web3 space will know about the story of CryptoKitties. Digital cats, buy, sell them, cross them, super. They crashed Ethereum, right? When CryptoKitties came out, it crashed Ethereum. Ethereum, of course, as many of you might know, is the largest programmable blockchain and probably the most popular at the moment. With only 10,000 daily active users. If you went to speak to the gentleman next door to our table from King and mentioned 10,000 daily active users, he would laugh at you. Fast forward 5 years, things have improved a lot, right? Sunflower Land, very popular game, launched on Polygon. Polygon is the scaling solution for Ethereum. It crashed Polygon, yeah? More respectable numbers, in fairness, but still, our colleague from King next door to us would shrug a little bit at 500,000 weekly active users. Yeah? So I think the scaling problem is being worked on. I think it's getting there. And I think I'm very confident for the future that companies like Freeverse and companies like, many of the other great companies who are working on this will manage to get there in the end to something where it's kind of feasible and usable for large scaling games. But what I really want to challenge and what I really want to change is the idea of an NFT as a collectible. I think it's a dead end. Let me rephrase that. I think it's a dead end for the majority of users. People do like collecting things, don't get me wrong, right? People in the real world, they collect stamps, and they collect trading cards, and, I don't know, guitars and cars, and whatever they want to collect. That's fine. I'm not hating on collection, that's great, yeah? But the value of the real world economy, not concerned with collecting stuff, dwarfs collecting in the real world, right? And I think that the value of the game economy should dwarf that is just restricted just to collecting things in games, right? Of course, people like collecting things, but I think the value of the rest of the economy already dwarfs it. We've seen with these trading markets that it already dwarfs it, right? And so I think what we have to do for NFTs and for blockchain and Web3 technology to succeed in games is to move the discussion away from collectibles and static items and have dynamic NFTs, dynamic assets. We at Freeverse call them living assets that can evolve and change based on what the user does. And if you manage that, you change the passive activity of collecting an NFT or a token or an asset into an active experiencing of engaging with that asset, as you should be doing within the game. Now, when you do that, when you make all the properties of that token to be mutable, you always need to make sure it's certified on chain. You don't want that token URI pointing to some random server, which might get taken down or hacked or whatever you like. That is a problem that I think we'll start seeing more and more of at the moment, thanks to the SEC taking some interest in the space. And I think that if you manage to do that, you unveil the rest of the iceberg. If the collectibles are the tip of the iceberg, you're unveiling the rest of the iceberg. And essentially, in summary, you're doing this. You're moving away from this initial boom of NFTs that we've had. Fine, super, thanks for the memories, bye-bye. And we're moving into blockchain, Web3, non-fungible tokens, solving problems that already exist and making sure that games are fun and still permitting increased revenue and monetization of that long tail, just like Chris Anderson would have wanted. At Freeverse, that's what we do. We are a layer 2 solution, which we expose via a platform API, which game developers can connect to. You can charge a recurring revenue, control your marketplace. All of our NFTs are dynamic NFTs. They can evolve based on rules you set for your game. We scale to very high standards. We're very eco-friendly as a result of that scaling. And we have a payment gateway that permits trading in pretty much every single currency in the world, whether it's regular currency or cryptocurrency. If you want to find out more about us, we have a stand here in the expo. Here's some information. My name is Alun Evans. Thank you so much for your time. I appreciate it.